Interest is the major cause of the debt-based financial system that is the major cause of global warming. And this has led many to ask the major question. James Gustav Speth, the former administrator of United Nations Development Programme, went on to say that the real way we can prevent or save our environment is by answering the big question. How can the operating instructions for the modern world economy be changed so that economic activity both protects and restores the natural world? As Muslims, our response to Speth's query is embedded in our tradition. And this is by nature something that other people have answered. The reason being is that, as alluded to by economists such as E.F. Schumacher, all economics is based on a set of principles. And the current set of economics, although advocating a value-free or invisible hand methodology, is based on principles. And these principles are nihilistic, materialistic. And the only way we can bring about a viable change is by resorting to or returning to the set of social, ethical, moral principles embedded in major world religions. E.F. Schumacher, in his book Small is Beautiful, in its fourth chapter, entitled Buddhist Economics, alluded to Buddhism as being such a basis. But he also said this could just as easily be replaced by any major world religion, and he highlighted Islam as being one. The imperative lies on Muslims to join forces with others who have similar principles and impacting these injunctions that will bring about a new economy. The answer to James Gustav Speth's query is that the operating instructions are there. An Islamic economy has a solution, but it requires will and determination to bring it about. In the absence of an Islamic economy, and in the legalization of interest and the divorce of ethics from what went on to become neoclassical economics, a modern financial landscape has emerged. And this is a quick summary of the world we see today and the world that existed at the time the Muslim world finally arrived at independence. At the national level, we have commercial banks. Commercial banks as institutions arose directly out of the legalization of interest. Through the removal of the gold standard, commercial banks now deal in fiat currency, which is paper currency, given legal value by the government. They also engage in a fractional reserve basis, which once again is simply a result of the idea of the justification of interest. The greater your reserve, the greater profit you can make. This network of banks is supported by the central bank as a lender of last resort. And the reason why is because even though commercial banks portray themselves as depository banks in keeping with their original function, the history of commercial banks came from goldsmiths who originally took deposits. They are financial intermediaries. They lend much of that money out and make profit as interest. Now, this illusion of them being depository is how the system goes on. And the time people lose this illusion would break the system. And to support this, the story needs to be supported by the lender of last resort, i.e. the central bank. That's what's happening at the national level. This system is replicated at the global level through multilateral institutions such as the IMF and the World Bank. The IMF and the World Bank were founded in the aftermath of the Second World War in the Bretton Woods Agreement in 1944. The IMF, standing for the International Monetary Fund, is an intergovernmental organization that oversees the global financial system by following the macroeconomic policies of its member countries. The World Bank has a different remit. Its chief objective is to fight global poverty. However, its track record is the exact opposite. If we look at the nature of its record, we'll find that it has consistently helped the rich get richer, while shortchanging the poor and displacing millions of people, pushing them into destitution. Our point here isn't to say that everyone who works in the World Bank is unjust or insincere. Our point is to highlight the nature of the system, in that despite people's good intent, the system, and the fact being that the World Bank, much of the bank's policies when it comes to structural adjustment, involves the promotion of high-tech energy, transportation projects, and Western-style capital-intensive agriculture development schemes that inevitably support the large corporations that provide the bulk of the financing for the World Bank, then we'll see that the system is bound to result in the result with the result that it does. And the result being that third world debt is perhaps the greatest catastrophe of this century. When we look at those poor pictures of Africa, we shouldn't think that this is somehow because of inherent corruption in Africa, as others would allow you to believe. This is a result of the system. This system has brought this about. And what's happening on the global level is simply the global transportation of what's happening at the macro level. Interest and riba, coupled with the institutions that it has brought about, brings about this disproportionate nature of the world. Aside from the banks, at both the national and global level, there is the idea of the global financial markets, the markets whereby the banks support their activities and people make more and more money or save their money. The global financial markets can be said to primarily consist of the capital markets, which consist of securities, which could either be debt or equity. The capital market includes primarily the stock market and the bond market. As of 2009, the size of the worldwide bond market was estimated to be about 82 trillion, whereas the stock market was less. This allows for banks to engage in short-term liquidity, and equity is another form of investment. Then you have the derivatives market. These are basically financial instruments like future contracts, options, and swaps that are derived from other forms of assets. The purpose of this market is mainly to transfer risk, although it has increasingly become trade-like, speculative trade. In 2009, once again the same year, the total world derivatives market had been estimated to be 791 trillion face or nominal value. That is 11 times the size of the otherwise entire world economy. The much of this trade is speculative and notional. This ever-expanding gap between the real and the speculative economy has led people such as Bernard Lietaer in his book The Future of Money to refer to this market as becoming a global casino. I'd like you to make note of this word, global casino. Much of modern-day trade is gambling. This is the market that exists. This is the financial system that exists when the Muslim world got independence, the last of which was, I think the first was Indonesia and the last was Algeria in 1963. If we analyze this financial system, we'll see that it is founded on interest and debt proliferation, being the modus operandi by which commercial banks, the backbone of the system, operate. It favors debt. The global economy and its growth runs on debt. The legislative and regulatory system supports debt over equity. It has institutionalized contractual uncertainty and speculative transactions. Derivative markets and much of the trade of the financial markets is based on zero-sum game, wherein the contract themselves have inherent uncertainties. It has institutionalized the Sharia prohibition of maisir or gambling. Speculative positions taken through trading in derivative markets is basically gambling. It has stifled the development of the real economy. The proliferation of debt and derivatives constantly creates this divorce. It has systematically stifled justice and equity. The hegemonistic, oppressive nature of the system has enabled global multilateral institutions to administer policies in favor of rich corporate interests. What was formerly colonization of nations is now colonization of corporates. What was formerly slavery of nations is now slavery to corporates. And the nature of this system consistently allowing for an immoral or amoral lack of morality in its stance has meant that what was previously odious to traditional communities is now standard trade. Standard trade in liquor, pornography, armaments, although being debated, such as the nature of nuclear energy, are often sidelined in favor of short-term commercial benefit. Much of the trade that we see today at the global level, right down to retail level, is not real trade. It is organized monopolistic trade, whereby the supply line is controlled in the inevitable favorable dynamics of those who possess greater capital. This financial system is continually, through the effect of globalization, destroying local communities and local culture, an inevitable result of which is the loss of domestic and distinctive national and regional cultures to a brash consumer ethic. such as McDonald's, Pepsi, and Nike. And this leads us towards the point, the Islamic Big Mac. What is the Islamicization process? This system created a set of needs and a set of paradigm by which society operates. When Muslim scholars sought, or when the Islamic scholars sought to propose a solution, rather than looking at the repugnant or the aspects that this system has brought about, they accepted, by and large, the needs and the pragmatic aspect. McDonald's exists everywhere. Everyone likes junk food. We need the Islamic Big Mac. Of course, they may not have thought that the idea of Islamic junk food is a bit of an oxymoron. If you have a consistent diet of Islamic Big Mac, you're likely to have Islamic cholesterol, Islamic heart attack, and Islamic diabetes. But these other things don't come into account. This was in stark contrast to the original discourse of the Islamic economists. If you look at the inception of Islamic economists, when they discussed how an Islamic economy would operate, the insistence was of spiritual development, of communities, of a dynamic of finance that would accentuate the concept of justice and allow for equitable modes such as profit and loss sharing. We see the initial experiments in Islamic finance such as the Mitghamer Bank and the Lembaga Tabun Haji as emphasizing this. The Mitghamer Bank in Egypt was a social bank that had a variety of accounts, and it focused on religious people committed to principles. The Tabung Haji was to facilitate the Hajj pilgrims, and so they would give their money into deposits, and then this fund would then manage these deposits in investments, and as bonus payments some of the investments would go back to the depositors, but this wasn't agreed. As a result, today Malaysia is a leader in the market of Hajj. We see that this is a successful example of what Islamic finance can produce. Tabung Hajj has now, in addition to providing Haji services, maintains a network of 111 branches, probably more, with over 4 million accounts and a total of US $4 million in investment. It is an example of how true Islamic finance can literally alleviate the social welfare responsibilities of governments. Today, the Tabung Hajj has literally taken over, with regards to Malaysia, all the functions that was supposedly assumed by ministries of Hajj in other Muslim countries. It has an exclusive department responsible to take care of all the services required in respect of Hajj pilgrimage, such as security, welfare, medical, and otherwise emergency services. This was the original conception of how Islamic finance should be. But in the 1970s, in a landmark conference held in Makkah Mukarramah in 1976, entitled the First International Conference on Islamic Economics, attended by some 300 Sharia scholars, economists, financiers, and journalists, the birth of a new breed of Islamic finance occurred. The idea of pragmatism held sway. We've discovered oil in the Middle East. How do we invest this money? The only modes of investment that were familiar to people were those of the commercial bank. This conference led to the development of a new breed. Following that conference, and very much in keeping around the same timeline, the birth of a new breed evolved, the Islamic commercial bank. There was a shift from the Mitghamer, a shift from the Islamic economics discourse, a shift from community micro-level based finance to the financing of large corporates and other financial institutions. At the global level, there was the Islamic Development Bank, established in 1975. And this was, of course, supported by Islamic commercial banks. But at no time did perhaps the thought occur that what is the function of a bank in the conventional financial industry? It's a financial intermediary. How does it fulfill its function? Through the course of interest. If we're meant to mimic that function using Islamic contracts, this creates a very confusing scenario, similar to the Islamic Big Mac. What helped the situation get better was the idea or the discussion pertaining to murabaha, al-amr bil-shira'. And I make a distinction between this murabaha and the murabaha that we find in our books of fiqh, of traditional Islamic jurisprudence. The murabaha in the books of fiqh is